All righty. So I'm going to go ahead and like I said, I'm going to share my screens. I don't know which ones are going to pop up. We'll do this one. I think my clicker is like, all right. Can you guys see my insurance 101 for realtors and LO screen?
Yes, we can.
Awesome. Thanks, Joe. All right, let me go to slideshow and we'll just go from the beginning. All right, you guys know who I am. All right, so my first slide is just about replacement cost. I think it's I think it's important that we just go through what the difference in replacement cost is versus market value. Realtors, does this ever come up for you guys? You guys are being so quiet.
Honestly, on a purchase, I don't think that we get a lot of questions about replacement cost. But I know that some people just don't understand the difference between, homeowners insurance for the mortgage value versus if you actually had to build the exact same. So sometimes more historic buildings, the replacement cost would be way more than what they're purchasing it for.
Yeah. And right now people are purchasing houses for like what, 50,000 more than asking price of the market value. So the cost to rebuild that house may be a lot less than what they're paying for it. So this is where people get like nervous, or I have to explain to them what the difference is. Just so you all know, the difference basically is replacement cost from an insurance perspective is the cost that it is to rebuild that home at the same like, kind, and quality that it is today. So like Julie said, an older house is going to be more expensive to replace because a lot of them have like plaster walls, really old materials that aren't as easy to find anymore. Those homes are more expensive to insure. But there are things on homeowners insurance that we can endorse on there that will make it more reasonable. Like if we don't insure it for full replacement cost, there is a coverage called functional replacement cost, and that's going to replace it with today's materials basically. So if they have plaster walls and plaster ceiling, having this endorsed, it's still replacement cost, but it's going to replace it for drywall, which is going to be a lot, probably not as expensive, but a lot easier to find so that we can rebuild their home faster. So that's really the difference. Replacement cost doesn't incorporate the cost of the property. So, Julie, I just saw you guys listed a 100-acre land there. If it had a house on it, the replacement cost would only cover that house. So those 100 acres, that the client's paying, maybe if there was a house built on that, $1 million for that land plus the house, the replacement cost of the house is still going to be $200,000 because that's the difference, between the land and the house. So that's another area where sometimes we have to do a little explaining to the insured because they're like, wait, I'm paying $1 million. Why, why are you only insuring my house for 200,000? Well, the land's not going to burn down. Like the insurance company's not going to replace the land. That's not covered on a homeowner's insurance policy. The house is what's covered. So that's what they're, gauging their replacement cost on. So we don't look at market value. They don't look at the land. They just look at what is this house built out of? How big is it? What year was it built? And then like what kind of materials were used? And that's how they figure that out. Any questions on replacement cost?
Sam,
So, yeah.
How do higher end finishes factor into replacement costs? Someone who put in nicer countertops, nicer appliances, light fixtures, blah, blah, blah.
Yep, that all factors into it. So the nicer the house, the higher the replacement cost is going to be. We ask questions about, is your kitchen, and the way most insurance carriers look at it is it builder's grade, semi-custom, custom. So semi-custom is going to be like granite countertops, maybe some like cupboards that are like custom cabinetry. And then full on custom is basically everything is custom made. And those are going to be more expensive to replace. We want to make sure that they're covered for what, the value of it is. But yeah, Joe, that's a good question. It does make a difference. And it's important that the agent's asking those questions. Some agents won't. They'll just put stuff in there to get it to the loan amount, honestly. But to Julie's point, and then to talk about like that people are paying more for homes now than what they're valued at. It's just important that we have the right information, the right kind of roof. If it's a metal roof, those are worth more than asphalt shingles. So those are some of the things that why we ask those questions whenever we're rating a homeowner's policy.
Yeah. And I guess that would be
Yeah.
a good point for us to tell our clients after they buy the house, hey, if you're planning on doing, remodels, upgrades, whatever it is, let your insurance agent know after the fact, because you're going to want to make sure you're covered for the high end stuff you're putting in.
Yes. Yeah, that's a great point. And also, like, if they're going to be building a shed or a barn or something like that, that's on other structures. That's coverage B on the homeowner's policy. You want to make sure that they've got those covered as well. And the other thing, Joe, about that is if they're going to be doing renovations, so if they're going to be putting a new roof on because they're buying a house with an old roof, that new roof is going to get a way better rate on their insurance than the old roof. So I always tell my clients, hey, especially if they have a 20-year-old or more roof, as soon as you replace that sucker, give me a call and we will reshop this and we will find you a better rate, because roofs is a big determinator in the cost of the insurance. Any other questions on replacement cost?
So what are some other improvements or something? So like if they replace the roof, have them give you a call. What are some other significant projects that they could do that could change their rate
They can
or
improve
their
the rate.
replacement?
Good question, Shannon, and thanks for being here. So
Sorry, I'm doing laundry.
that's okay. Hey, what a way to entertain yourself while you're doing laundry. So definitely the roof is something that you're going to talk about. That's really the biggest thing. If they get new siding or a new finish to the outside of their house, so they change it from, I don't know, vinyl siding, or if they change it, let's say from aluminum siding to vinyl siding, those are things that we would want to know. That could impact it a little bit. If they get a new heater, that's something that can impact the rate in a positive way. And then if they make any upgrades to plumbing or electrical, maybe they're going from a 100 amp to a 200 amp. Those are some of the things. The basic rating things that the insurance carriers use to rate the insurance is going to be the roof, how old it is, and the size of the home, how old the electrical and the plumbing are. Obviously, knob and tube wiring is a big issue. It's old and it catches on fire. And so insurance carriers don't love that. I do have some carriers that will accept it on a percentage basis, like if it's 10% is still knob and tube. And I do have at least one carrier that is really good at working with me on people who are buying a house with knob and tube, but going to replace it within the first like 30 to 60 days. So generally, like speaking, if you guys are showing homes with knob and tube wiring, set the expectation that they're probably going to want to get that fixed. Maybe they can negotiate. I know now it's like not the best time of the market to be negotiating things like that in the sale, but at least prepare them to let them know that like that's something that's probably going to need to be replaced, because it's not going to be insurable if the whole house is knob and tube. Any other questions on any of that? Oh, I've got chats. Sorry, I don't know how to. Okay, cool. All right, flood insurance. What questions do you guys have about flood insurance before I get into it? Because I can tell you a bunch of stuff, but I want to know what you want to know.
I don't have any questions per se, but I can just testify to the fact that when I have a client in need of flood insurance questions, I sent them over and they wrote with you and they were very happy with what you told them.
Oh, good.
So that's good for me.
I appreciate that. Yeah, flood insurance is like honestly, it's a pain in the butt. Nobody likes it. Nobody likes dealing with it. Clients, when they find out their house is in a flood zone, it's like, ugh, soul crushing almost, because especially in today's market, like I'm getting a lot more buyers that are buying homes in flood zones because they can get the house. And so my advice for you all is, if the house is in a flood zone, have them call me right, or their agent, whoever their agent is, right away to get a quote, because flood insurance can be $400 a year. It could be $7,000 a year. It just depends on the flood mapping, where it is. And there's nothing like I can do to estimate that. Like I just have to run it through and see what it is. And truly the flood insurance raters that we use now are so intuitive. I can do it in 5 or 10 minutes. So don't ever hesitate to ask me like, hey, Sam, can you, an NFIP program is the same. Like you can't shop the government program. So if it's an FHA loan or a VA loan, they are going to have to use the NFIP program. So I'll need to know that when I quote it, because if they're FHA or VA, I know that's my only option. That's who I'm going to quote it with first. I can do it really quickly and let them know what the rate will be. If it is a conventional loan, I can shop it with my private flood carriers, which I do have like 5 different carriers now that are doing private flood. And I can see who's going to be the best rate. And it's never the same. I seriously like have been doing this now for, 20 years insurance. And it's still like, whenever I run it, I don't know what I'm going to get. So that's kind of what to know about flood. I think from a realtor perspective is just, if you know it's in a flood zone, tell them to get that quote right out the gate. So they don't get what I get a lot. 2 weeks before closing date, they call me and say, oh, I need to get flood insurance. I quote them and it's $4,000 and they're heartbroken. And it's just a horrible experience. But if they can call me right when they make the offer or when they're about to make the offer, we can get that out up front. They can plan for it, or they can say, no, it's not worth it to me to pay that. And you guys can all move on. If you're unsure if something's in a flood zone, just shoot me a text or an email with the address and I'll run the flood zone determination for you, and I'll email you the map, and you'll know exactly where it's at. So I don't love flood insurance. I'm not going to lie. I don't love running flood maps. I don't love doing those things. But I do love helping you all. And it literally takes me 5 minutes. And if I'm home, I'll do these for you guys because I know that it helps you do your job better. And you guys are all amazing partners to me. So, so that's my spiel on flood. It's one of those things. But if you don't have an agent that knows what they're doing with flood, it can really be ugly because there's a lot of nuances. There's a lot of like different carrier rules. Most of the time they have to be paid up front. I have like, actually NFIP program is the one that will allow it to be mortgagee bill. But all my private flood carriers has to be paid in full by the client prior to the closing date. So like, there's just a bunch of stuff that can make the experience bad for the client if the agent doesn't know what they're doing. And I have learned those all the hard way, honestly. And I, have done a lot of research and trying to make sure that that never happens again. Because my job, I consider you guys my clients. And if I'm not serving your clients in a way that makes the experience as good as what you want your clients to have, then I'm not doing right by them, but I'm not doing right by you either. And my goal is to be a part of your team.
I'd like to just piggyback that.
Yeah.
And say, as a lender, agents out there, if your lender isn't telling you, hey, this is in a flood zone when you're putting a quote together, or when you ask them for a pre-approval letter for an updated property address, if your lender's not taking the time to search the flood maps themselves, or to call Sam and ask her to do it on their behalf, which I'm guilty of doing sometimes,
totally fine.
Call your lender and ask them to start doing that for you, just to avoid, like Sam said, 2 weeks before closing, finding out it's in a flood zone. We have the ability to check that up front as well.
Yeah, it's the worst. I would rather do it way up front than like get that call. I've had 2 where insurance agents don't know what they're doing. They write the policy and then like the day of closing, I get a call from the realtor like, Sam, can you save this? Like the other agent did it wrong. And now like they're in the wrong program because they didn't know about whatever. And it's just no bueno. So nip this one in the butt as upfront as possible to make it the best possible experience for the client and really everyone involved, because it could end up delaying closing if if like Joe doesn't get what he needs for his underwriting and then numbers are changed, and it just can be messy, messy, messy. If you guys don't know Joe Peck is the only lender that's on the phone right now, and he is with Breeze Lending, and he's awesome. Joe and I worked together now for like 3 years, and his clients love him. It's just a good.
Also multitasking on the call, I just left a beer distributor.
Hey, and there's that. All right, guys. Does anybody have any other questions about flood? Nothing. All right. Mine subsidence. This is kind of like a new up and coming, I don't know, like up and coming risk. It's been around. Obviously, coal mining has been around forever. And I would say new to some insurance carriers offering mine subsidence as an endorsement. So mine subsidence and sinkhole coverage are not the same thing. Almost every carrier offers an endorsement for sinkhole collapse, which is like the bus in Pittsburgh, right? That fell into the hole like randomly. That's a sinkhole. Mine subsidence is something that can be a little bit predicted based on the mine subsidence map. And you guys can see, I have a link to the Pennsylvania mine subsidence map on the screen, and I can share that with you guys if you want me to email it to you or whatever. But this is a great tool. You just type in the address and it pulls it up and says, oh, it's in a coal mining area, insurance is recommended, or it'll say, it's not in a coal mining area, don't worry about it. But this will help you determine, if they might need it. I'm seeing more and more lenders requiring it now, if they are. And let me tell you, most of Western Pennsylvania is in a coal mining area. So if the lender does require this, there's 2 options through my agency. The client can either add it as an endorsement to their homeowner's policy if they're with one of the carriers that offers it, or they can go on this link and they can just buy it from the state online. This week, I've had 2 clients actually ask me about mine subsidence. Actually, Julie, one of the people was from your office that I was working with on this. And I quoted it on a homeowner's policy, and it was almost $200 for the year. I went on the mine government map, and it was $41 for the year. So I think that the government program is probably cheaper than endorsing a homeowner's policy, but I do have carriers that offer it if the client doesn't want to deal with the government program, or they don't want to go online and have to purchase it themselves. I can't buy it for them on the government program. I can walk them through it and, help them do it. But I just want to make sure you all know that that's an option, because it is, at least in that scenario, it was a lot cheaper to buy it through the government than it was to put it on the homeowner's policy. So this is one of those coverages that I'll always quote it both ways for the client, just to make sure they're getting the best possible rate. But from what I saw, at least in the last few times that I've checked it, the government program was a far better rate. But this is one of those things, I talk about it to every single one of my clients, and I do a follow-up email when I write your policy. And on my follow-up email, I put this link in there, and I mentioned to them that, if your house collapses or falls into the earth due to coal mining activity, it's not covered on your homeowner's policy. You need this coverage if you want to have that coverage. And so it's just one of those things. I do it honestly. I don't ever want somebody to call me and be like, hey, my house just fell into the world and you didn't tell me about this. I want to make sure all my clients are educated and at least have the map that they can go check it out on their own. I like maps. I'm kind of nerdy like that. And so I think some people like to look at it too. But this shouldn't be a scary thing. It shouldn't be a deterrent from buying a house, because the coverage is available. And quite honestly, I've never heard of this happening to anybody of my clients. So I think when we're looking at flood insurance, we're looking at mine subsidence. You're in a high risk flood zone. You're in a coal mining area. I think your risk is greater to be flooded than it would be for your house to collapse because of coal mining. And I didn't mention on the flood zone thing that, like, a lot of people think if they're in a low risk flood zone, they're not in a flood zone. Any house can flood. If they're in a valley and there's a creek in their backyard, I would recommend them at least getting like $10,000 of flood insurance just to like cover their stuff if their basement was to flood. My brother's in a low risk flood zone. His house flooded two years ago, and he lost like all of his tools, all of his washer and dryer, all that stuff that people keep in their basement. And, you know, he didn't have flood insurance because he was like, I'm not in a flood zone. I was like, well, you are. Everybody's in a flood zone, and everybody can get flood insurance. It's not, there's some like myth out there that if you're not in a high risk flood zone, you're not eligible to buy flood insurance, which is a huge lie. If an insurance agent tells you that, tell them they're a liar and call me because everybody can get it. All right, here's a really gross slide for you. Do you guys have any questions on mine subsidence before I go to the poo screen?
I have one thing to add on mine subsidence.
Yeah.
So one of the reasons why it's becoming more common is in, I think, 2020, the VA changed their guidelines and started requiring it for any property over a mining area. Before, it was only required if an appraiser mentioned it. So if the appraiser didn't mention it, we weren't checking it as an industry. Since the VA made the change, a lot of conservative lenders said, well, we're just going to follow the most conservative ruling on this, and we're just going to check for everybody. And then there's like talk that FHA, Fannie, and Freddie are all going to follow suit and require it for any home over an active mining area in the near future.
That's great information, Joe. I didn't know that, but it makes sense why I've been getting more requests for it.
Yeah, well, I was the other lender. One of the two that you had this week was me. So I've been on the phone quite a bit talking about mine subsidence and getting a great history on it from, a lot of people smarter than me.
That's great. Thanks for sharing that. And realtors, that's great information for you guys to have too. So it's right now it's required on all VA loans, Joe?
For VA loans, it's required on every property that's over the active mining area. For FHA and conventional loans, even if the property's over the active mining area, it's not required unless the appraiser mentions it. But we're seeing more appraisers mention it now because of the change the VA made. And with that happening, now the trend is going to everyone's going to eventually require it if the property's over an active mining area, regardless if the appraiser mentions it or not.
Great info. Julie, your team works with a lot of military folks, so that's probably going to be something that's going to come up. So I'll email you guys this link so you have it. Like I said, the one I looked at the other night for Katie, it was $41 for the year for, I think it was 150,000 in coverage. So I think the government does cap it at 250,000. So if it's a $400,000 house, they're going to end up probably having to pay the rate that the insurance carrier offers, because the insurance carrier is going to cover it up to the policy limit. And like the one carrier I have openly that some of you have seen that cover every home up to guaranteed replacement cost of $5 million, they do offer mine subsidence. So they're going to be a great option for your clients. That's the one, Joe, that I quoted the other day for your client. I mean, it was still high, but it was covered.
Yeah, I think this is a great option. I knew when she had concerns that she should call, but it is nice to have this because it really did freak her client out. And sadly, like to me, I don't do it enough, and I haven't seen it enough to know where to go, how to check, and things like that. So I do think that this will be, just having this link and the options to double check that information is just going to be super helpful to the business.
Good. Yay. I was hoping I would at least like give one nugget of like helpfulness to you guys today, if nothing else. So good. Yeah, this one is, like I said, it's been coming up more and more, and I'll share this link with you guys all too via email and in the notes. Important homeowners endorsements. These are things that you're going to want to kind of like put in the brains of your clients as you're kind of walking through the home. And some of these things are things that when you're listing a house, you might want to suggest that the home seller adds to their policy, just because some of this stuff can happen during the process. And some of this, if they don't have coverage on their home, owner's policy, they're going to have to come out of pocket a lot. And some of these coverages have 30-day wait periods because they don't want people signing up that have an issue. It's kind of like flood insurance. There's a 30-day wait on it if it's not for a home closing, because they don't want to like look at the news report and, oh, there's a flood, it's going to storm for the next week. There's going to be a flood. We're going to buy it now. So insurance carriers aren't big on buying risks. They're big on buying, something that they can like kind of attract. So these are some of the important ones that I've had realtors kind of get excited about in the past that I thought I would share with you guys. So water backup, that's what this picture is. It's disgusting, you guys. What happens is sometimes roots grow into the pipes that are underground, especially if they have like those old terracotta pipes or anything like that, or they just have a slight crack and something and a root gets into it, and you go to flush your toilet, you flush your toilet and you flush your toilet and it's not going anywhere. So guess what? Eventually it comes back and there's a bunch of poo on your floor. That is not covered under a homeowner's policy unless it's endorsed with water backup sump discharge coverage. And this can be, I quote it on every single policy. I just put it in there. And then when I review the coverages, I tell the client, this also includes this. You may reject this coverages if you want to, but I explain it just like that. If you want to have to clean up the poo that's on your floor whenever your water backs up, then you can reject this coverage. But if you want somebody else to come in and clean it up for you and take care of that and make sure that it's cleaned up right, you're going to want this coverage because it's not cheap to clean this up. And I've had like maybe 4 clients ever reject it. It's important, especially too for investors, because they're not living there. So guess what? Renters, tenants, they're not always the best at calling and saying like, hey, there's or maybe, they don't go in the basement a lot because it's a duplex or something and they just wouldn't realize that it's there until it starts to smell funny. So I recommend $10,000 water backup on every single policy. A lot of my clients do select it at 5,000, but it can go all the way up to, 50,000 on some policies and even higher. So that's an important one. The buried service line coverage. This is the one where some realtors have said like, oh man, when I list a home, I should make sure they have this on their policy because when they go to like look through the pipes, what's that inspection called? The like sewer line inspection or whatever. If there's a crack or a leak and it needs replaced, if they have this coverage, it can be covered on their homeowner's policy. But a lot of carriers do have a 30-day wait period on this because this is one of those things where somebody finds out there's a crack under their yard, they call their insurance agent, they add this coverage and they file the claim tomorrow. So it's one of those things that they do have a 30-day wait period because they don't want people to find out they have an issue and call. But if you're listing a home, I think it's wise to just ask them, do you have this coverage on your homeowner's policy? Because, it might be something that we come across whenever we're getting your house prepped to sell. This coverage is better on a homeowner's policy than it is to buy it from the utility company. So I'm sure you've all received the letters from the utility company saying like, Mayday, Mayday, your underground water line is not covered. If it breaks, you have to pay for it. We're going to sell you this coverage. And it's usually like $2,500 of coverage for about $7 or $8 a month, which sounds really cheap and great. But on homeowners policies, it's generally $10,000 worth of coverage. It's going to cover any of the buried lines. So water, sewer, gas. Some people have their electrical lines under the ground. That's going to be covered on this too. And it's usually like $30 a year. So a lot less than $7 or $8 a month. So this is one of those coverages that I would say, get it on your, and it's another one. So water backup, all these ones that are on here, minus scheduled items, I don't just put those on, but the top 3 endorsements right there, I quote on every single policy because these things happen. And I want the client to tell me no, I don't want to forget to tell them about it, right? So that's one way that I like make sure my clients are covered properly and that I'm not forgetting to offer them something that could happen down the road. And then they have a loss and they call and say, well, Sam, you never even told me that was an option. Now on this way, those 4 clients that have rejected water backup, which I'm still dreading the day they call me and tell me that there's poo on their floor. And I have to tell them, remember you rejected that coverage. But at any rate, I quote these on every single one. Do you guys have any questions on water backup or buried service line coverage? No? Joseph?
I have one real quick. Is there any
Shannon?
type of coverage for like if there was a code change 43 years ago
Yeah.
and it wasn't taken care of, like, would that be something that it was found? I mean, I know it's too late for this seller now, but I'm just thinking of, I'm in the middle of a mess right now for my
Oh,
buyer,
no.
and the seller doesn't want to update it. And it's like, it was required to be changed in 1977. But I'm thinking going forward with different sellers that, that are the original builders, and maybe they didn't update the house to code when certain things change. Like, is there anything to help with
Yeah,
that?
there's a coverage. It's called actually like building code and alterations or something like that. But it's usually, that is usually included on every policy form. So Shannon, did your seller or did the seller check with their homeowners company to see if they have that coverage?
I don't know, but I will suggest that to the other agent.
Yeah, because generally that's automatically included. Like you can increase it, but generally there's like it's like a percentage of coverage A. So it's, and off the top of my head, I want to say it's between like a 4 and a 10%.
Okay.
If it's, if it's a $200,000 house, they may have up to $20,000 on their policy to cover that. So I would check, because that's on almost every policy I sell or every carrier I sell, it's automatically part of the policy.
Awesome. Thank you. I will definitely pass that along. Thanks.
Yeah, you're welcome. Good question. Any other questions on water backup or buried service lines? Nope. All right. No poo on the floor. That's the that's the golden rule on the water backup. Replacement costs on personal property, guys. This is another one. I don't know why it's not just included on every policy, because nobody wants actual cash value for their stuff, but it is something that needs to be endorsed on every policy. I endorse it on every policy. I don't sell a policy without this, unless it's an investment property and they don't keep any of their stuff at the house. But this is an endorsement that it's just automatically on there. If you don't have replacement cost on your stuff, you're going to get like what the value of it is today. So like if you bought a TV 6 years ago and it costed you $1,000, it's probably worth what, $50 today. That's what you would get for it if this policy wasn't endorsed with replacement cost on personal property. If it is endorsed with replacement cost, you're going to get the same TV, I mean, probably it's going to be different because it's not 6 years old, but like same brand, same size, whatever, even though it's going to cost more today. So you want to make sure, and it's really not your job to make sure of this. It's my job. I'm just making you aware of it because it is one of those things that I think it should just be like that, but it's not. And then scheduled items, like if your clients have expensive stuff, like an expensive engagement ring or a gun collection, that they have like expensive guns, if they have artwork or fancy carpets or anything like that, we can schedule those items onto the homeowner's policy. And it's covered for basically everything with no deductible. So that's the difference between it being covered just on the regular replacement cost, is that on replacement cost for the home, like under coverage C on the policy, your stuff is covered if your house burns down or if you have a roof leak or something like that. But if I'm traveling and I go swimming in a hotel pool and my engagement ring falls off in the pool and goes down the drain and I never get it back, that wouldn't be covered under my homeowner's policy just as is. But if it was scheduled, it would be covered for an agreed value of whatever my ring was worth. And I wouldn't have to pay a deductible to get it back. So these are some things that I discuss with every client, but I just want to make you guys aware that that is something that we can do. And it's a really nice thing. I had a client call me last week and she was like, hey, I can't find my ring. How does my insurance cover it? And I was like, well, we talked about scheduling it. You didn't schedule it. And it was like a $700 ring. So in all fairness, you probably wouldn't have it scheduled at that cost, but that would have been covered under personal property, but your deductible applies. So it was $1,000 deductible and a $700 ring. So anyway, you can schedule that piece of jewelry and have the benefit of not having the deductible on it. Any questions on endorsements? Things we add on. I don't add a lot on, actually, you guys. I give clients, I don't try to sell them things that they may not need. I'll mention it to them if like buried service line. I'm not going to offer a rural home that has well water and a septic tank to put buried service line on their policy because they don't need it. They don't have public utilities. But I've seen policies where agents put that stuff on there because it makes the premium higher, and it's just not a good way to do business. So, so know that I'll never do that to people. Umbrella insurance. This is another one, guys, especially for your high net worth clients. When you're talking to them about like getting their homeowners insurance, if they're buying a $700,000 house, also let them know that they should probably look into getting an umbrella policy that's going to go over top of their home and their autos, and it's going to extend liability up to $1 million. So if somebody gets hurt on their property, they're liable for it. If I use this example all the time and it freaks people out, but I think it gets the point across that if it's trick or treat night at your house and kids are coming to your house to trick or treat, and one of their highly flammable costumes goes over top of your jack-o'-lantern and catches on fire and that kid gets burned and his parents sue you, you're liable for that. Even though you didn't necessarily, well, you probably didn't invite them on your property if it's trick or treat, but like even people who aren't invited onto your property, if they get hurt on your property, unfortunately, you're liable for that. So I'm a big Dave Ramsey listener. He says that for every $500,000 of net worth you have, you should go to the next million in the umbrella. So if your client's net worth is $500,000 or more, they're going to want $1 million umbrella. If they're $1.6 million net worth, they're going to want a $2 million umbrella, so forth and so on. I'll be transparent. My net worth isn't quite $500,000 yet. But my husband does things like has birthday parties for my kids with a 100-foot slip and slide that goes down a hill in my backyard. And guess what? We have $1 million umbrella because if one of those kids slips into a tree or something like that, like, and we get sued, I want to make sure that we're covered. And it covers your auto policy too. So if you cause an accident and there's a 3-car pileup and the payout $700,000 and you have $500,000 on your auto policy, you're responsible for that other $200,000. But if you have an umbrella policy, it's going to kick in. And umbrellas are cheap, like $260 a year for $1 million if you have a house, a car, and let's say one teenage driver. Because teenage drivers do make the umbrella policies more expensive because they're riskier. They make more driving mistakes and also do weird things that could. So like if your kid gets in a fight and hurts somebody, not that anybody in here has kids would do that, but just as an example, and their parents decide to sue you because their kid's in the hospital with a broken face, you're liable for that because you or your property caused somebody else pain. So just some things to think about, but make sure, especially with your high net worth clients, most of them, when I talk to them, they're like, nobody's ever mentioned an umbrella policy to me before. And it's a shame because it is something that can really protect them for a really reasonable price. All right, how do we get any questions on umbrellas? No. How do we get the best homeowners rate? What are the tricks? So call the agent early. Don't have people drag their feet to get their homeowners insurance. I know it's the least cool part of the home buying process. And there's like nothing fun and exciting about calling an insurance agent, but the sooner they do it, the better the rate's going to be because there's advanced quote discounts. I had a guy just last month call me at the last minute to get his homeowners insurance rate. I gave him a good rate, got the policy started, and then everything got in and they decided to move up his closing date. Well, when we reached the effective date, his rate went up $80. And that sucks. But had he gotten the quote when he made the offer and I had it issued, he would be good to go. It wouldn't have changed the rate because we quoted it more than 2 weeks out. So definitely encourage them to shop early to make sure that they get the best rate. The next thing is to encourage them to get an auto quote too. So if they're not getting their homeowner's quote through the agent that they already have for auto, have them quote it. They could save money on both. But generally the discount on the home is the big discount and it's like 20 to 30%. So it's substantial. It's usually a couple $100. So bundling is a great way to save money. The age of the roof, like I said, if it's a new roof, they're going to get a better rate. If it's a new build, I had a new build that was like a $600,000 house. And I thought for sure it was going to be at least $1,000 because it was a big house. It was like $550 a year. But everything's new. brand new house, brand new roof, you know, that people had good credit. Everything just kind of like fell together. And so that was, you know, that was a good thing. So new electrical, new roof, newer plumbing. Those are really the things that the insurance carriers are looking for. A lot of people will ask me about alarm systems. Most insurance companies do give a discount for alarm systems, but it's like 1 or 2%. So don't expect the homeowner's discount to pay for the alarm system. It's just a benefit if you have, but it's not going to pay for the alarm system. You know, I forgot to put on here about builder's risk. And I know somebody had asked about builder's risk insurance. Do you guys have any questions on builder's risk? Do you know what that is? That's for like a course of like a new build.
I have a question on general rates.
Yeah.
So you get someone's driver's license number when you quote them.
Yep.
What does the information that comes from the driver's license number have to do with the quote?
The homeowner's quote?
Yeah.
It doesn't. I don't need the driver's license for a homeowner's quote. If
Okay, you just get that because you're also quoting auto.
yeah,
You got it.
yeah, because they do pull obviously those reports. But yeah, I don't have any homeowners carriers that require a driver's license number. If an agent's asking you for that unsolicited, it's because they're quoting the auto. So
Does their credit play into their homeowner's rating?
yeah, so it's a financial, it's not like credit scores. They have an 800 credit score. It doesn't mean they're going to get the best financial responsibility rating from a homeowner's insurance standpoint, but they base it on like basically how have they paid bills in the past? Have they had homeowners insurance in the past? Have they had, if they had renters insurance, did they have 300,000 in liability or greater? So there are definitely things from a financial perspective that they look for to show that they're responsible and that they've made good decisions in the past, but it's not necessarily just based on credit score. And also, Joe, just to clarify, it's not a hard credit hit whenever we run the insurance. So it's not going to show up on a credit report or anything like that. It might say like soft hit on the side, but it's not going to impact their score. So that's a question I get a lot is like, if I run this, you're running it with 50 companies, are they all going to pull my credit? And it's like, no, it's not going to impact your ability to qualify for your loan. It's not going to impact your credit score, nothing like that.
Awesome.
And yeah.
How do those restricted dog breeds affect the rate?
Oh, good question. They don't affect the rate. They impact whether or not they're eligible for certain carriers. So companies either have a vicious dog list or they don't. And so if somebody calls me and says, I have a Rottweiler, I'm not quoting them with the carriers that don't like Rottweilers because they don't accept them. But as far as the rate, it doesn't impact the rate.
It's just whether they'll get coverage. That's it.
Yeah, and it has to do with that liability. Anything that happens on your property or by somebody that lives in your house, including your dog, is your responsibility. If your dog, the pizza man shows up with your pizza and the dog gets excited to see somebody and it jumps and it scratches the paint on the pizza driver's car, guess what? It's your liability that's paying for his job. So those are the things that they look for. And that's why they ask about trampolines. And that's why they ask about swimming pools, because people get hurt on trampolines and people get hurt in swimming pools. But again, generally those things aren't impacting the rate. It's just impacting, this company won't take trampolines, but most of mine do take trampolines now as long as they have the net around them. And almost everybody takes pools as long as there's a fence or at least around the yard. Good question. Anybody else have any questions? Did anybody specifically want to hear anything about builder's risk insurance? I know that was one of the comments in in Facebook. Basically, a builder's risk policy covers the build of a home. So if you are doing a course of, or what are they called, construction loans, or somebody is building a new house, they're going to need a builder's risk policy, and that's just going to cover the building materials while they're sitting in your yard, while they're in transport, and things like that. And depending on the value, I do a ton of these. I work with a lender who specifically specializes in construction loans. Depending on the value of the home, we can write it with like travelers on a homeowner's policy with an endorsement, and then liability is included. If the build is more than 1.5 million, I have to do it on a builder's risk policy, which does not include liability. So then I have to write a separate premises liability policy. And one of the big questions I get is, why do I need liability on a builder's risk? Doesn't the construction company carry the liability? And they do cover it for the build. If they hurt somebody or they hurt you or they damage your property while they're building it, their policy is going to cover it. But again, you're building a $2 million house and some looky-loo might come in and want to look at it while it's not built yet, and they fall in a hole on your property and break their hip, and now they're suing you. So that's where the liability is really important to carry whenever you're building a house, even though the contractor is going to pick up the liability for like the actual build. Any questions on that, or any questions on anything else? I thought this cat was funny. Anybody? Did I just answer all your homeowners insurance questions that you've ever had?
Sure did. Great job.
Thanks, Julie. Thanks, Lita and Shannon and Joe for being here. And we lost Jennifer. She probably had to go sell a house. But if you guys have any questions or you need anything at all, or you just want to reach out, ask me to run a flood zone, or questions about like anything, just, you guys are my referral partners. You guys have my cell phone numbers. Text me, call me. I'm always available for you and your clients. And I appreciate you. I'm going to stop sharing that. I appreciate you continuing to, be advocates for what we're doing over here. And I want to continue to support you any way I can. So let me know what I can do for you and we'll make it happen.
Thanks, Sam.
All right. Well, have an awesome day, you guys. And I don't know. Thanks for coming.
Thanks, Sam.
Thank you.
Thank you.
Bye.
Thanks, Sam.
Thank you. Thanks for being here.